Yeah, so we are saying that the depreciation from the day you bought the asset up to now. So when we're doing this note, we start with, say we are in, so this will be, this will give us carrying amount at the beginning of the year.
Yeah.
Right? So if you take the cost and then subtract the accumulated depreciation, you get the carrying amount at the beginning of the year. So accumulated depreciation, I was saying that the depreciation from the date you bought the asset. So if you bought it 10 years ago, all the depreciation from the beginning of the 10 years up to now.
Mm-hmm.
And then you're saying cost is the value, the price that you bought the asset for. So cost minus accumulated depreciation gives you the carrying amount at the beginning.
Okay.
Right. But after that, so usually for land, yeah, I didn't put anything because land, you have the cost at the beginning, which is there. And then usually land is not depreciated.
Yeah.
Usually land is not depreciated, so there's a dash there. And then the carrying amount will be just the cost minus the nothing, which gives you still the cost will be the carrying amount. But for buildings, equipment, and motor vehicles, usually this is what happens.
Okay.
Right. And then you have additions. Right. So additions are items that you would have bought during the current financial year. So the idea of this note is to give us all the activities that would have happened in terms of buying of our equipment during the year, and also disposals of equipment as well as the depreciation. Remember, depreciation, we said that's the loss in value of the asset, right?
Mm-hmm.
Due to use, yes. So this is the situation there. You've added some equipment, so that's additions. And then you have depreciation for the year. And then you put it there. For land, there is no depreciation. But for buildings, you can have depreciation as well as for equipment and motor vehicles. So depreciation for the year, that's there. And then disposals. So additions are at cost.
Mm-hmm.
But when we talk of disposals, these disposals will have to be at carrying amount. At carrying amount. And these disposals, you are subtracting them. As well as depreciation, it is subtracted. Because remember, we said depreciation is a loss in value, therefore you subtract.
Yeah.
And then disposals at carrying amount, this is an asset that you have sold. If you sell a non-current asset, that's disposals, and you have to deduct it at carrying amount. Here, we can put a box to say disposals at carrying amount. That will be the cost of the asset that being disposed, cost less total depreciation. Okay, let's say accumulated. Let's just keep on using word accumulated. Accumulated depreciation on date of sale. It needs to be on date of sale. So they can give you an accumulated depreciation of the asset that you sold, but they can give you that amount as of the beginning of the year. So you need accumulated depreciation on the date that you sold.
Okay.
Yeah. So that's the case there. Okay. You can also have revaluations, but at your level, you won't be having revaluations. So we'll just put it there, but you won't see this one at this stage. And then,
Okay.
so that will be it. You then take this carrying amount. So let's call this carrying amount, that's your 1. Okay, we need a better color. 1. And then you add the additions. You subtract this one. You subtract this one, right? And then, of course, if there's a revaluation, if it's positive, you add it, and 5. And then if you add all those amounts, you will get your carrying amount.
So it's 1 minus 2 minus 3 minus 4 plus 5. Is that how I understood?
1 plus 2 minus 3 minus 4 plus 5.
Okay.
So those in
Plus
brackets
5.
are being subtracted.
Okay, brackets are negatives. Got it.
Yeah. So carrying amount at the end of year. So this was carrying amount at the beginning of the year. At the beginning of the year, but there were changes during the year, all these changes, and then you've got a carrying amount at the end of the year, which is this one. Now, this carrying amount at the end of the year should also agree with this box here. So items, the item on top of a box agrees with all the items, should be the total of all those items in the box. So it should agree with the cost, which you will have, because in this cost, for you to get the cost, you will have the cost at the beginning. You already have the cost at the beginning, plus the cost of additions minus the cost of disposals. That will be the cost at the end. You are just taking in what you bought and taking out what you sold during the year. That will give you the cost at the end. So you're starting with the cost that you had at the beginning, and then you also bought some items, so you add the cost of the items that you bought, and then you take out the cost of the items that you sold. All right, I'll write some of these things down so that when we're doing it, you can always have somewhere to refer to.
Yeah, reference back to that. Yeah, no, that's good.
So cost, that's there. And then accumulated depreciation. All right, so you subtract that. So this accumulated depreciation at the end is the accumulated depreciation at the beginning. All right, perhaps I should start writing with that one. I should start writing with that. Okay. Accumulated depreciation at the end is equal to accumulated depreciation at the beginning plus depreciation for the year minus accumulated depreciation on assets sold on the date of sale. All right. So that's you can, yeah, that's one equation that you can always use. When you're given a question, you need to calculate all these depreciations, and then you work it like that. And then you can also have
I think this is close to what we did with the car one.
Yes,
This accumulative depreciation. That's kind of the one that we worked out.
exactly. So this is just a matter of putting everything that we worked out on that car example onto a PPE note, right? And the PPE note is what usually get asked in your exam. They love asking the PPE note, and they can combine it with the statement of financial position. Right? And then we can say carrying amount at the end of the year. At the end is equal to carrying amount at the beginning plus additions at cost well, this is just another way minus disposal at carrying amount. All right. Minus depreciation for the year.
Okay. That's the 1, 2, 3, 4, 5.
Yeah, that's what I wanted to say. Here. Yeah, but again, this is just another way of looking at it. If the way of 1, 2, 3, 4, 5 doesn't work for you,
to get to the calculation now, that's actually what you should be looking for, is in writing.
Yeah, and then what else do we have here? Cost at the end is equal to cost at the beginning plus additions at cost minus disposals, yes, at cost. That's that. And then disposals at carrying amount this one you can say cost of assets sold minus accumulated depreciation on assets sold at the beginning of the year minus depreciation on assets sold for the year. All right. And then this will be the final one that I'm giving you. And then we start doing a question. Depreciation for the year. This one is equal to depreciation on okay, so we've got 3 types of assets here. Assets that were there throughout the year, and then additions, and then disposals. So I would just say depreciation on assets available for the entire 12 months, and then plus depreciation on additions from the date acquired to the end of the year. Plus depreciation on disposals from beginning of year to date of disposal. Oh, I just thought of another one, which is accumulated depreciation at the end. Did I put that one? No. Accumulated depreciation at the end. Oh, I have it. Yeah, so that's all. So 1, 2. So we can actually put everything so that we just come and put values. So we've got costs, accumulated depreciation, and then this will be carrying amount, at the beginning. All right, we know that they'll be made up of these two in all the cases.
Cost.
Yeah. And then with additions, and then with depreciation for the year, and then with disposals, at carrying amount. Okay, and then on your disposals, you can put the costs and then accumulated depreciation there. And then, yeah, then you have carrying amount, at the end. And then you've got the cost. And then you also have the accumulated depreciation. Right, so let's do this.
Okay.
Now, you see all the items that are given inside here, there is a date at the top first.
Yeah.
31 October 2014. So if an item is given inside this box, which is an extract of the balances, the assumption is that that value is given at 31 October 2014. That's the value of that date. However, there are certain items where a date is given in front of the item. Like accumulated depreciation on vehicles, and then they put a date.
Yeah.
November 2013. Then it means it's no longer at the date given, but it's now for the date that's in front there.
Okay.
No longer at the date on top, but the date on front. Once
The moment the date is allocated, it's more in line with that date.
Exactly. So once you're given items like this, you need to, first of all, write everything that you're given on the dates that it pertains to. So land and buildings at cost, that's 790, but obviously this one is at the end. So you can just go land and buildings at cost of land and buildings at the end. Here, you write 790.
Cost 790. Okay.
Yeah, and then vehicles at cost, that's 400, and that's on 31 October 2014. So our year is starting on, this is 1 November 2013. And 31 October 2014. This is the end. That's when our year ends.
2014, got it. Yeah.
So vehicles that cost 400,000 is given, that's at the end. Of course, there could be items that might happen that might change these values, but in general, that's what it means.
Hold on though, why do you write the 790 in line with the 2014 October if it's dated for November?
No. These two amounts are for the cost.
Oh shit, sorry, I didn't see the date, the accumulated depreciation. I was sorry, my brain was all frazzled there. No, that's fine. Sorry.
Okay.
My mistake. Got it.
So these ones are given in 31 October 2014.
Yeah.
It's the accumulated depreciation amounts that you were referring to. Equipment, 360. All right? Also at the end. But they could give us additional information that might tell us that they didn't include the additions and stuff like that. So then you need to add more items there. And then accumulated depreciation on 1 November for motor vehicles is 204. Are you there?
Yeah, I'm listening.
And then for equipment is 97,560. All right. The reason why I'm doing this, all these values you're putting in, which are correct, are maths, right? And they don't really require any working. They just require you to just put them in.
Okay.
Yeah.
Given amounts.
Yes. So you just need to know where they go, and you get your marks.
Okay.
All right. So we are done with those values, those easy marks. Now let's go and see their depreciation policy. Equipment is 10% per annum. are diminishing and vehicles is straight line. So they've got both depreciation method in here, which is good because we're still practicing. So we need to know both. Note, on 30 April 2014, an additional vehicle was purchased at a cost price of 60,000. All right. So 30 April 2014, that's during the current financial year, right? Because our current financial year is running from, it's ending on 31 October.
Yep.
2014 from 1 September.
November 2013.
Is it October? Oh,
it was in November, 1st of November.
Yeah, 1 November, yeah. All right. It was not adding up now. 2013. So we bought this other asset on which date? On 30 April.
30th of April. 30th of April.
So October, November, December, January, February, March, April. That's that's how many months? That's 7 months, right?
You count in November, right?
Yes.
Because it's on the 1st, so it's November is 1, December, January, February, March, April. Isn't that 6 then?
Yeah, 6.
6.
So 6 months, that's 30 April. And then we bought an asset for 60,000. And then we had it throughout the year. So we depreciated from the day that we bought it up to the end of the year. But before we even depreciate it, we can include it here under additions to our vehicles. So additions, you just write 60,000. Just like that. And then from there, let's look at what else happened. On 30 April, an additional vehicle was purchased at a price of 60,000 and was correctly accounted for in the accounting records of the entity. No other non-current assets was acquired or disposed. Okay, so that's fine. The land and building consists of offices on note number 2. The land and buildings consist of offices and shops situated in Rustenburg and purchased on 2 February 2007. It is the policy of the entity not to depreciate land and buildings. We are just looking for information that pertains to assets. Okay. Water and electricity is given. The owner deposited 20,000 into the business as an additional capital contribution. All right, and then we already know number 5. So it seems that's all we have in terms of our assets.
Not a lot.
Sorry?
Not a lot.
Yes, not a lot. So let's finish up everything here because it's kind of straightforward now. All right. So if they didn't buy any land and buildings at the beginning, land and buildings would still remain 790 from the beginning, the cost. And there's no depreciation, so it's a dash, and the carrying amount remains 790. That makes sense, right? We are told that in the current year, the value of our land and buildings is 790, and we are also told that the same land and buildings were purchased on 2 February 2007, which is 5 plus many years ago.
Yeah,
Right.
it was 2007, so it's 7 years prior.
Yeah. So, but the cost is still the same, and they told us again that it is the policy not to depreciate land and buildings. I don't know why they said it. It is the policy of the entity not to depreciate land and buildings. So the cost remains the same, and the cost remains the same as the carrying amount, because there's no depreciation. So land and buildings, that cost is 790. It was
Remains
790 of the year. Carrying amount was 790. Now it's still 790, and depreciation is still nothing. That's their story there. So at the end, carrying amount there is nothing. Here there won't be anything. Just the same. There were no disposals. They never said anything. That's all for land and buildings.
Okay.
Right. For motor vehicles now,
There's a 6-month depreciation. An additional 60,000.
yes. So for motor vehicles, how are we depreciating? This is on cost, right?
Yeah. So I take it the 204 is already depreciated. It's just the 60,000 that still needs to be calculated.
Okay, just hold on there. The 204 is accumulated depreciation.
Yeah.
At the beginning. Yes. So that's fine. So we need 2 things here. We don't know the cost of our vehicles at the beginning, but we know that the cost at the end is 400,000, and we also know that we bought a vehicle for 60,000. So it makes sense that at the beginning of the year, since we never sold anything, the cost was how much?
340.
340, yes. We were just working backwards. And then the carrying amount will therefore would have been the carrying amount at the beginning.
It's the 204. Let me just calculate that for you. 304 or 340 minus 204, 123 equals. So what is that? 136,000.
136,000.
Yeah, it's 340 minus 204, right?
Yeah.
Yeah.
And then our depreciation for motor vehicles, we have motor vehicles of 340 at the beginning of the year, and we never sold any of these. So that's times 12 over 12 times 20%, right?
Okay.
We had them for an entire year, and our depreciation rate is 20% according to the straight line. And according to the straight line, it means based on cost. Yes. And then we bought another vehicle for 60,000. But this vehicle, we only had it from April, end of April, to the end of year. So we had it for 6 months. That's 20%. And then we figure out those.
First one is times 11. So that's basically not really, the 12 over 12 is not going to make a difference. That's times 1 times 20%, right? Times 1.2 equals 408,000. Is that right? 408,000. I'm just make sure that my calculations are correct.
Okay, that's bigger than what it is.
How did you calculate?
I mean, 340,000 times 20%. 20% is 0.2.
Yeah, I just said times 1.20. Isn't that 20%?
No. You need the 0.20.
Oh, 0.20. Sorry. 340 times 0.2.
Yes.
That's 68,000.
68,000. Okay. And then the same for this one.
And that's 60,000 times 6 divided by 12 times 0.2 equals. That makes sense, right?
How much?
6,000.
6,000.
Is that?
I can hardly hear you.
No, I said, is that? I think my calculation is right there. Just double check.
How much did you get?
6,000.
Okay.
It's because it's 6 over 12, so
Yeah,
that's
correct.
pretty much. It's
that's
basically
correct.
10%.
Yes. I've just calculated as well. Yeah. So the total 74,000, right?
Yeah.
Okay. So our depreciation for the year is going to be 74,000 there. And then disposals, we didn't dispose anything. All right. So this one was quite simple because of that. And then carrying amount at the end, you take the carrying amount at the beginning plus additions minus, so this is 2 minus this one. So 136,000 plus 60,000 minus 74,000.
136,000. 136 plus 60,000 minus 74,000. 122,000.
122,000.
Yep.
All right. And then the accumulated depreciation at the end, there are two ways of calculating it. The most accurate or the best way is to take the accumulated at the beginning plus depreciation for the year.
Okay. So accumulate the 204 plus
74,000.
74,000. That's 278.
278,000. Now, if you say 400 minus 278, it should get you 122 again.
Hold on. 278. So 400,000 minus 278. Yep. That's right.
Okay. Now, if we talk of the equipment, depreciation is on the reducing balancing method, but it's also simple because there wasn't nothing that was bought or sold during the year.
Okay.
All right, yeah. So just hold on a moment. I've got a situation I have to handle here.
No worries. I can hear the situation.
All right, I think I had managed to diffuse that one.
Okay.
All right, okay. So it's going to be reducing balancing, but they said they never sold anything, I guess.
Apparently not.
Yeah. So on 30 April, an additional vehicle was purchased at cost price of 60,000 and was correctly accounted for in the accounting records of the entity. No other non-current assets were acquired or disposed during the year. So this is what I'm working with. So it means it was just that vehicle which was purchased. They never sold anything else or purchased anything else. So because of that, we assume that the cost of our equipment at the end is the cost at the beginning, because nothing was sold or bought during the year. You understand the logic?
Yeah.
Yeah.
That remains the same.
Yes.
So just minus that thing.
Yeah.
360 minus 97560 equals 262440.
2624.
40.
All right. And then depreciation for the year, because this is a diminishing method and nothing was sold during the year, we are just going to use the carrying amount at the beginning. So
Okay.
26440 multiplied by 10%. Right. So this is on motor vehicles, right? It's based on cost.
So it's 26,244.
Yeah. All right. And this is equipment. And it's reducing balancing. So that's why here we're taking the carrying amount. You see 26244 is the carrying amount. It's the carrying amount there. After saying 360 minus 97,560. And then we get this carrying amount. That's what we took. In the case of motor vehicle, we use 340, which is the cost. So that's the difference there. So our depreciation will be 26244. And then we subtract it. So we take the carrying amount at the beginning minus depreciation. We get the carrying amount at the end.
Sorry, my thing's bombing. Ping, ping, ping. Okay, go on.
All right, so we're taking the carrying amount at the beginning, which is 262440 minus the depreciation for the year, which is 26244. That's the only thing that's there, because there's no addition, there's no disposals.
Yeah.
Yeah. So once we do that, we get the carrying amount at the end.
Okay. Let me just have a look. So what one is the 262? That's one, right? 262440, and then there's nothing to add. We just need to minus.
Yeah.
Minus the 26244, which gets to 236196.
236196. Okay, if we take the 97,560 plus the 26,244, that's the accumulated depreciation at the beginning, plus depreciation for the year. It should give us the accumulated depreciation at the end.
Okay.
Yeah. How much are you getting for that?
Sorry, I've missed it now. So the 236,196. Do I need to minus that of the 360 minus that?
Yeah, you could do that. That's a shortcut to just say 360 minus that, you get this one.
Yeah.
Yeah, it's just a shortcut.
But what's the real method behind it?
Yeah, you could say the 97,560, the accumulated depreciation at the beginning, plus
97560 plus
26,244.
26,244. 244. And the double check would be just minusing the 2, which would give you that answer, which is 123,804. 123,804.
Yes.
So if I want to make sure that that is correct, I need to take the 360 and I need to minus 236,149, right? 146, sorry.
Yeah.
Is that a 4?
So which one do you want to check?
And the bottom one, the 123,804, in order to check that, I should be able to take 360 minus 236,146. Shouldn't that give me the same answer?
Yeah, it should. I'm not sure. This should be 19. I'm not sure. 146, 196, but somewhere there.
Yeah, that doesn't, the 236 doesn't look right now for me. Where do we get the 236 from? That is from the 262440 minus 26,400.
No. So this one, I said 262440. Yeah. Yes. Minus this one.
440 minus 26244 equals, it's 236,196.
Yeah. Sorry, my 9s and 4s.
Look the same.
They look the same.
Okay, 9. That's fine.
I don't know how to improve them.
Okay, cool. And then basically what I need to check is that 360 or minus 236,196 should be, yes, 123,804.
Yes.
Yeah, sorry, I was like, that didn't calculate now, but okay, it does now. It was because I changed it to a 4.
All right. Okay, so okay, this carrying amount for land should be 790 there. 790,000. So if you add the carrying amount at the end, if you add this one, that's your property, plant, and equipment.
So you calculate all of them together.
Yeah, you add this one plus that one.
790,000 plus 122,000 plus 236,196 equals, okay, it's 1148,196.
Okay,
48196.
Okay. All right, so that's our PPE. So our statement of financial position, right? You are available tomorrow, Thursday?
Yeah,
All right, that's cool. So I was that.
that's a very long calculation just to work out how much depreciation you've had.
Yeah. So I was thinking that maybe we will have to finish off tomorrow because I have to be somewhere.
Yeah.
In
No,
another.
no, that's fine. I understand.
I have to be.
You've got a situation looking for food as well, I'm sure. I also have one looking at me.
Yeah. All right. So.
No, that's perfectly fine. We can do that.
All right. So we can finish it tomorrow. We can do around about the same time. And then we can make.
Just remember to, I don't know if mine recorded this, but if you can, if it didn't record, because whenever I click record, it says, please request recording permission from the meeting host. So it didn't record anything. So if you can share it with me, that'd be great.
All right. So it seems like
yours recorded, but mine didn't.
Yeah. So it seems like it's recording here. So I will be having the recording. And then tomorrow we can just finish off the statement of financial position, and then we start with we can start another question which is a little bit different with this one, and then we know that this data is clear, and then we can go to the profit and loss.
Great stuff. You can send that to me. Thanks.
All right, I'll send it right away once we just finish here.
Great, thanks. Well, enjoy the evening. I'll chat to you tomorrow.
Okay, great.
Cheers then.
Cheers.